5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stocks hitting records even as tech caution continues. That rotation trade ongoing with cyclicals getting a boost from the Fed's dovish cut. Meantime, Broadcom disappoints. Investors look for a bigger AI payoff. Plus, President Trump signals U.S. help with Ukraine security as President Zelensky floats a referendum on handing over territory to Russia. So let's take a look at those markets then. Futures pointed lower. We did have just small moves in the S&P and the Nasdaq 100 yesterday, but we did in fact hit records for the S&P and especially for the Russell 2000. So small caps really benefiting that rotation trade, as I said, ongoing. But let's take a look at the bond universe because I want to point to what's even more of a bull steepening. So you have the 30-year yield now up to 482 while the 2-year yield is at 353. The 10-year yield not going anywhere. But that 2s10 spread now is at 63 basis points. So that's a good 10, 12 basis points wider than it was right before the FOMC meeting. And just one other word on equities before we get to our individual movers. We have Goldman Sachs out now saying that we're going to see 10% to 12% EPS growth for stocks next year and the year after. And that adds to RBC, Oppenheimer, Deutsche Bank, so many banks that are looking for even more earnings per share growth. In Goldman's case, they're saying it's because of AI. Smaller companies are not seeing the effects yet. Bigger companies are seeing them for now. All right, let's get to those individual movers then. Over to London and to Valerie Teitel. Valerie.
Good morning, Vonnie. Happy Friday to you. Let's start with a check on Broadcom. Out with results that disappointed investors. We're seeing shares of Broadcom down 4.9% in pre-market trade. The amount of orders in backlog disappointed the market. And also the CEO on the conference call after earnings declined to give a 2026 revenue forecast. These things combined are igniting worries about margins, which has kept Broadcom shares under pressure this morning, down 5%. Next, let's move on to athleisure. Lululemon doing very well in the pre-market trade this morning. This is on the back of a beat and a raise for the athleisure company. The shares are up nearly 10%. They also announced that their CEO is stepping down in January. They have yet to announce who is going to replace him, perhaps, but a different strategy change with a new CEO is exciting the market. Remember, Lululemon has been suffering from a sales decline really since the peak of COVID of athleisure wear. Let's head over to Switzerland. Finally, let's check on UBS because shares are at a 17-year high. Vonnie, they're higher by 4.3%, one of the biggest gainers in the European session. And this is off the back of reporting that the Swiss regulator is going to allow UBS to use AT1 bonds instead of equity to meet capital requirements. And potentially this is paving the way out of a political standoff between UBS and the Swiss regulator as they try to tighten banking rules within Switzerland. Vonnie?
Valerie, thank you so much. That's Valerie Teitel there in London. And coming up in this hour, we're going to be speaking with Seema Shah of Principal Asset Management on the Fed's path in 2026. So let's turn to the broader market rally now with global stocks hitting records. Joining us now, cross-asset reporter Justina Lee. So Justina, in spite of everything and even with all the fragility in the AI trade, we saw records yesterday, not just across the globe, but even in the United States.
Yeah, that's right. And I think we always end up using this word, but it kind of really is applicable here, which is like, the Goldilocks trade, right? I think that what investors are thinking about right now is that on one hand, you kind of have still a pretty solid U.S. economic outlook. And we're kind of seeing that from the fact that the Fed actually upgraded their growth forecast for next year. And at the same time, we still got that rate cut from the Fed. Investors are still pricing in about 2 more rate cuts coming next year. And inflation is still a concern, but I think the message that we got from the Fed this week was not particularly hawkish. So putting all of that together, we always talk about the Santa rally, and I think this is exactly what we're kind of seeing right now.
It's going to be more of a Santa grind, though, right? Particularly when you see the sell-off in some of the final few equities that reported earnings. Now, some of them had huge run-ups this year, so maybe we should take that into account. But can we expect more of a rotation trade into the year end?
Yeah, I think that's what's really interesting about the rally that we've been seeing, because we are seeing that rotation from some of the, red hot tech names that have already rallied this year into some of that laggards. And here I'm talking about, small caps, value stocks. If we look at which stocks have been doing the best this week, it's actually, financials, material stocks, and, some energy names. And I think that's really interesting because usually those names do well when kind of the growth outlook is at the rosiest. And so, you might kind of ask the question of, does it really is this rotation really justified? But I think at the very least, it shows that people are kind of optimistic enough to kind of try to put their money into these laggards that might be seeing slightly lower valuations.
Now, Justina, we do have Deutsche Bank and Goldman Sachs also forecasting on the dollar out today, saying that it will resume its slide next year as the Fed keeps nudging down interest rates. What would that do for equities and for corporate earnings more broadly?
Yeah, and I think that kind of really depends on whether you're, an exporter or an importer, right? Like if you're kind of maybe more dependent on overseas earning, then that could kind of translate into a very different earnings picture. And I think one interesting thing about these bank forecasts is that, they're kind of resting their case on the fact that we're going to see more U.S. rate cuts, and maybe that's going to be rooted in more weakness in the U.S. growth. And so we're kind of seeing a bit of tension from that currency outlook, with the outlook for U.S. stocks right now.
All right, Justina, thank you so much. That is Bloomberg's Justina Lee. Back to one of the stocks we're watching. Broadcom shares sliding in the pre-market as investors scrutinize the chipmaker's $73 billion backlog of AI product orders. That figure fell short of more bullish expectations. So let's have a listen.
It's hard for me to pinpoint what 26 is going to look like precisely. So I'd rather not give you guys any guidance, and that's why we don't give you guidance, but we do give it for Q1.
That was Broadcom CEO there, Hock Tan. Bloomberg Intelligence analyst Matt Bloxham joins us now for more. Matt, was it the number, the $73 billion, or was it the 6 quarters that it's going to take to roll this all out?
Yeah, I think it's a mixture of things, to be honest. I think it's definitely that, a bit of frustration that they're not willing to kind of give a clearer guide on the 2026. No, well, to be honest, I don't think that's so surprising. It's not something we'd typically expect a company to give at this point, particularly in such a kind of fast-moving market. And I think, the CEO there was trying to kind of give risk to the upside on that number, that $73 billion likely to grow, not shrink, but, just not trying to kind of get a pin down on any particular number. And if you look at the Q1 guidance, actually, improving revenue momentum, a doubling of their AI revenue year on year, and a better than expectations. I think the other issue that perhaps, kind of was a bit soft and disappointing for analysts and investors was the gross margin guide for Q1. So signaling about 100 basis point squeeze on gross margins as the product mix shifts more towards AI. I think they flagged that before, but I think that's kind of added to the uncertainty that people are trying to work out in their models about, A, how much revenue is going to grow, and B, what's the impact going to be on profitability.
And we really do have to take into account the run-up, right? 125% this year, and 2 weeks ago it had an 18% gain just on that week alone. But I do want to move to SoftBank because we have an exclusive Bloomberg scoop. Masayoshi Son is eyeing potential acquisitions, it seems, including data center operator Switch to expand in AI. Now, we knew he had AI aspirations, but why is he interested in this part of the stack?
Yeah, obviously the data center operators are kind of at the kind of foundational level of the AI opportunity, and so maybe the kind of return on equity you can expect to get on those kind of assets is perhaps kind of at the more modest end of the range, but it's still very strong, and it's arguably kind of a lot more visible than kind of further up the stack. And so I think they're kind of perhaps making a play that you've kind of got that clearer business model and still a huge amount of growth opportunities to come. So there's probably always going to be a kind of imbalance between supply and demand of data center capacity, and they see that as an interesting opportunity to kind of build out the portfolio. And obviously, SoftBank's got a mix of assets across different parts of the kind of AI stack. Don't want to second guess what they're doing, but it would kind of maybe the kind of filling in a blank and balancing out that kind of portfolio of risk they've got.
What about this story, Matt, that China is considering spending as much as $70 billion to support its chip-making industry? Where is that in the context of, what companies spend, what countries spend? Is it a lot, and should we be concerned?
Yeah, hard to obviously, the the US players are spending, 400 billion plus on AI investments. So, there is quite a contrast there, and I think certainly our own analysis in BI, suggests that generally speaking, the investment going to AI in China is lower, and that's not just because they're kind of being more cautious. It's structurally there's some differences there. But so I think the fact that $70 billion is being earmarked for that investment is, a clear sign that China is increasing its own efforts in this area and looking to kind of increase its independence from international markets. Obviously, we see these conflicting stories. NVIDIA is going to be allowed to sell its H200, more advanced chips into China. But I think that the rhetoric and the momentum from China recently is that it would rather kind of develop its homegrown technology than rely on US technology. So there's a huge number of markets internationally, think in particular like Asia, Africa, Latin America, where perhaps the geopolitical sensitivity isn't so high and they're not so influenced by the kind of US. And so they are big markets for China technology over the midterm to kind of sell into. And so I think that's where some of this investment is looking to support.
All right, Matt, thank you so much. Bloomberg Intelligence has Matt Bloxham there. President Trump, meanwhile, says the US is willing to help Ukraine as part of a security agreement to end the war with Russia, while continuing to express frustration with the pace of talks. This as Ukraine's Volodymyr Zelensky floated the idea of a referendum on handing territory to Russia. Bloomberg's Oliver Crook joins me now with more. Ollie, what guarantees is Trump considering and under what circumstances? We know, for example, that there were promises made in the past, but Zelensky isn't willing to just, accept promises. He wants something written down and accepted by, maybe Congress even.
And the reason that he wants that is because those promises have been made in the past, Vonnie. We remember the Budapest memorandum that basically secured Ukrainian sovereignty back in 1994 when the Ukrainians surrendered their nuclear weapons, which would have been obviously a very effective deterrent against any invasion by the Russians. There were guarantees made by the Russians, the Americans, the UK, and a number of others who were party to that contract. And of course, those were not honored. So the president of Ukraine, Volodymyr Zelensky, would like to get a very clear idea of what the security architecture would be promised to the Ukrainians in order to safeguard their sovereignty if they are able to get a peace deal negotiated. At the moment, we do not know what that architecture would look like. We do not know what President Trump is actually offering. But, Mavani, I think it is significant that President Trump is talking openly about a U.S. role in those security guarantees. It's not something that Trump really discusses very publicly at all. It's something, obviously, that's been discussed behind closed doors. But this is the President of the United States acknowledging that this is something that he's willing to play a role in. So significant from the Ukrainian perspective and the European perspective. The Europeans would also like to have some more talks over the weekend that would involve a delegation from the United States. We heard from Donald Trump that they will only send a delegation if they feel that the talks are making progress, and these are not meetings just for the sake of having meetings, which is one of the frustrations the Trump administration has aired over the last couple of days. So we'll find out if they are going to send a delegation over the weekend to Brussels, and that's really the next diplomatic moment we're looking for over the next 48 hours.
All right, Ollie, we do have to leave it there, but thank you so much. That's Bloomberg's Oliver Crook. Now on to other top stories trending on the terminal this morning. UBS shares soaring, hitting a 17-year high after a group of influential Swiss lawmakers proposed watering down the capital requirements for the bank. The proposal would allow UBS to use junior debt, known as AT1 bonds, instead of equity to meet capital requirements. Lululemon shares rallied in extended trading after boosting its full-year outlook and announcing a $1 billion increase to its stock buyback program. But Lulu also said that CEO Calvin McDonald was stepping down at the end of January. It's still searching for a replacement. And the UK economy contracted again in October, underscoring fears that momentum stalled in the run-up to the budget. GDP fell 0.1% in October, following a contraction of the same size in September. Economists had been expecting 0.2% growth. Decline was driven by drops in services and in construction. Coming up, we hear from Uber CEO Dara Khosrowshahi on where he sees autonomous driving for the company next year. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Autonomous vehicles are gradually making their way onto the streets of major cities. Uber has made hundreds of millions of dollars worth of investments to position itself as a key player in the market. Bloomberg Tech Asia co-host Annabelle Druller spoke with CEO Dara Khosrowshahi in an exclusive interview.
The APAC market, and in particular the North Asia markets as well, they are huge growth markets for us. And if you look, for example, in the rideshare business, over 30% of our global first trips coming into the category come from the APAC region. The area is growing very quickly, including taxi as well, which is actually one of our newest products on the platform. So for me, coming here, seeing the teams, meeting with local business people and regulators, and talking about how we can be part of the future growth of the region is really what my agenda is.
Early this year, you also put out a statement on the robo-taxi push as well.
Yes.
And so the Middle East and Asia were the markets for 2025
Yes.
to launch. And we've seen, of course, that initial deployment in the Middle East already. What's happening on the Asia side?
Well, lots of discussions on the Asia side. I think what's really important is to set up a regulatory framework to go forward. For example, Hong Kong has various trials and pilots going on, and in many other markets, we're talking to regulators about how we can be a part of shaping rideshare and autonomous rideshare going forward. The technology is absolutely getting there. These are the robot driver. It doesn't get tired, doesn't get distracted. And we very much look forward to working with various authorities to introduce rideshare into the markets. We're now live in 4 markets now, as we speak, in the U.S. And in the Middle East. And I expect to be in 10-plus markets by next year. And we want those markets to be in the Asia-Pacific region as well.
Where then in Asia do you think is the most likely place?
We'll see. I think that certainly Japan has great potential. They
are behind on their regulation.
They are behind in their regulation, but I think that they also understand that with an aging population, there's a real need for transportation, not just in the large cities, but in the rural areas. And for example, I experienced that personally going to Kaga City. And where we have communal rideshare, and kind of took a rideshare trip and understood what the needs are there. So we're talking with various countries, regulatory authorities. I think Japan is going to be part of it. I certainly hope that Hong Kong is going to be a part of it. Australia, where we were just talking about, is a huge market for us. So we're having those dialogues, and I think that the picture will shape up over the next 2 years because the technology is definitely getting there.
What do you make then for India in particular? Because, of course, your big competitor there is Rapido,
Yes.
and they've been very successful with a slightly different operating model, but including going down into lower tier or smaller tier cities. How do you also stay competitive there, and does that sparser geography strategy also fit for India?
Yeah, very much so. So with India, really, the fastest growing part of the Indian market is 2-wheelers and 3-wheelers. And the business model is different, actually. It's not a commission model, but it's actually a subscription model as well. Rapido is a real upstart there, but over the past months, we've been pushing back against them. And India continues to be a hugely promising market for us. So we're very happy about the recent results that we're seeing.
And that was our exclusive interview with Uber CEO Dara Khosrowshahi speaking with Bloomberg Tech Asia co-host Annabelle Druller. Coming up, Trump ups the pressure on Venezuela. U.S. issues new sanctions targeting Maduro's family and the oil sector. A look at what's making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the New York Times. The U.S. issuing new sanctions targeting Venezuela's leader, Nicolas Maduro, and his family. The administration is also seeking legal authority to seize oil from the Skipper. That's the tanker U.S. forces seized Wednesday. The Times says the moves represent a new front in President Trump's campaign to destabilize Maduro's regime. Next up, the Washington Post reporting that President Trump is expected to push dramatically loosening federal restrictions on marijuana. An executive order would direct agencies to reclassify marijuana as a Schedule III drug, similar to some prescription painkillers. The Post reports the move wouldn't legalize or decriminalize marijuana, but it would ease barriers to research and boost the bottom lines of legal businesses. And finally, on the Wall Street Journal's front page, Renaissance Technologies considering adjusting its trading models after two of its quantitative hedge funds suffered their worst months ever in October. The funds, which manage nearly $20 billion, use machine learning and algorithms to bet on and against thousands of stocks. The Journal says they weren't prepared for recent unusual moves in shares of some small companies, including meme stocks. All right, let's take a quick look at the macro picture now as we head into the second day post-FOMC. S&P futures pointed lower, but this after we hit a record yesterday, the 10-year yield at 4.16. Coming up, we're going to be speaking with Seema Shah of Principal Asset Management. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stocks hit records even as tech caution remains. The rotation trade continuing with cyclicals getting a boost from the Fed's dovish cut. Meantime, Broadcom disappoints. Investors looking for a bigger AI payoff. Plus, President Trump signals U.S. help with Ukraine's security. This as President Zelensky floats a referendum on handing over territory to Russia. So S&P futures pointed lower then, just fractionally, and this after we hit a record yesterday. Global stocks hitting a record, but particularly the S&P and the Russell, which is pointed higher again for Russell 2000 futures today. Now, tech may be taking the brunt of it because we obviously saw a little bit of a sell-off. The Nasdaq 100 was down 0.3% yesterday. Futures pointing to a decline today. A rocky couple of days. But we have a new call from Goldman Strategist based on that trade. The team expecting 12% EPS growth for next year and 10% EPS growth for 2027, crediting AI productivity gains. They say AI adoption is really only being seen by large companies now and eventually will also be seen by small companies. Let's move to bonds because we're still seeing that steepener trade. We have the 2-year yield really unchanged at 353.68, but that 30-year yield is going higher and higher, up another 2 basis points now to 482. In fact, let's look at the 2's 10 spread. Now, this isn't the 2's 30 spread, but at least you'll see how the 2's 10 spread has been going higher. Well, that is just in the last few hours, but basically it's moved up about 10 basis points in the last week. Let's get to some individual movers now for some stocks to watch. Here's Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on Broadcom. As you mentioned, some disappointing results after the bell yesterday. We're seeing shares of Broadcom down nearly 5% in pre-market trade. This is all in the back of their order backlog not being as juicy as the market had hoped. The CEO saying it's around $73 billion over the next 6 quarters. I think the market wanted to hear a higher number than that. He also failed to give 2026 guidance on the earnings call with investors yesterday, and this is just igniting some previous concerns about Broadcom that market had about margin compression headed into next year. So shares of Broadcom on a back foot, dragging down the Nasdaq with it today. Let's move over to the retail sector. Lululemon, a beat and a raise for the athleisure wear maker. The stock is up 9.4%. They also announced that their CEO is going to be stepping down at the end of January. Now, they have yet to announce his successor, Vonnie, but I think this is exciting the market, the prospect of a new CEO and perhaps a strategy change for Lululemon, who has been suffering from multiple years of sales declines. Lastly, I want to head over to Switzerland and talk about UBS. And this is one of the biggest, best performers across Europe today. UBS shares up 4%. And this comes after the Swiss regulator has told UBS they can use AT1 bonds instead of equity to meet capital requirements. And this is perhaps paving a way out of the political standoff between UBS and the Swiss regulator, who's been wanting to tighten banking regulations of late. Bonnie?
All right, Valerie, thank you so much. That's Valerie Teitel there. Seema Shah of Principal Asset Management says 2026 presents a paradox. She writes this. Innovation is fueling optimism, but market fragility and late cycle risks are rising. For investors, that means managing concentration and policy risks across an evolving global landscape will be essential. Seema Shah is Chief Global Strategist at Principal Asset Management, and she joins us now. So, Seema, how do investors begin to do that at the beginning of a year where it looks like there's only going to be one more cut, but really we have no idea because the next data we get doesn't come until next week?
Hi, yes, I think for next year, I think it's key for investors to try and take a bigger, broader macro picture. We are expecting further Fed cuts, maybe one, maybe two for next year. But importantly, that's still against a backdrop of fairly constructive economic growth. We're expecting to see some fiscal stimulus coming through in Q1, which should help consumer spending. We're expecting the continuation of AI capex as a real pillar for economic growth. And so although there may be a bit of a labour market slowdown, it's not something that we would be worried that it's going to turn into something recessionary. So that does construct a very kind of a positive economic outlook for next year. The thing is, it has to be balanced alongside some of the concerns around the AI bubble, concerns around how these companies are going to continue to deliver. So it becomes increasingly important in terms of how people position, in terms of trying to identify some of those winners and losers, and also think about what are the regional opportunities around the world.
If you've been avoiding the AI trade until now, do you then just decide that you're not going to participate, Seema, or are there still opportunities there?
So we are still positive about the broader AI trade. We continue to believe that this is a key factor of productivity gains over the coming years, decades even. But increasingly, it depends on which company you're starting to look at. So we would suggest that investors, you should have some exposure to AI, whether that's in the US or potentially in Asia, where some of the valuations are a little bit more attractive. But it also is important to think about what are the other companies which are going to benefit from having adopted AI over the next year or so. So we've obviously seen the tech companies do incredibly well in the last couple of years. But now it's almost the round for other companies. So financials, healthcare, retail, these are the areas which I think can start to see those benefits, so see some gains. So in a way, investors, if they don't already have exposure to AI, they can get exposure to AI productivity gains by looking at alternative sectors as well.
Exactly, and I think that's the point that the Goldman Sachs strategists were making earlier as well, that you're going to see this percolate through the economy. So do you bet on companies now that might benefit from it? I mean, we saw Lululemon rise 10% today. That could be just a unique story, but we have been seeing, as you say, retailers rise. Where do you look to get some benefit?
I mean, I think that any sector is going to have some kind of exposure to AI. So it really does become a case of looking through each company and what their plans are. But generally speaking, if you're looking across healthcare, manufacturing, even if you're looking at agriculture, there are so many opportunities and benefits that could come as companies think more and more about it. And as Goldman had said, it's typically the large companies so far that are benefiting, but we can expect to see that spreading across to small businesses. We do a number of surveys across a large number of small business clients, and they are talking increasingly about AI adoption and are expecting to see very significant productivity gains, which they think will actually be very positive from a wage outlook as well as a job hiring outlook. So I think there's a lot to come, which is quite a positive story. It does become a little bit about valuations, and as I said, companies and investors becoming quite selective about which companies they want to have exposure to.
So when you say next year will be a year of paradox, Seema, what exactly do you mean?
So I think, as I said, look, the constructive outlook from a macro side, combined with the AI productivity gains that we're expecting to see spreading across the economy is key. But at the same time, we have seen a bit of the narrative shift in terms of concerns around an AI bubble, where we would expect that each quarter, each earnings season, that there are concerns, questions from investors about AI and how these companies are going to be delivering on some of that return on investment. So we're expecting volatility and noise. And so as investors try and look through 2026, maybe trying to look beyond some of those typical AI names and thinking about where are the areas where we could see some additional upside against slightly more attractive valuations. So that year of paradox becomes one where selectivity, dispersion, diversification is an increasingly important narrative.
What about the bond market, Seema? We've seen this huge, bull steepener trade in the last couple of days. Might next week's data change all of that, or do we just see more of this?
Well, it's been a really interesting dynamic in terms of the bond market. And I think coinciding with some of that rally you've seen in cyclicals and small cap. And I think what we're seeing is we're not worried about inflation expectations taking off, but you are seeing slightly more positive growth estimates coming through. Some of that triggered, I think, by Chair Powell's slightly more optimistic take on the economy. It's only more optimistic than many people were expecting. Now, of course, as you said, next week we're going to be seeing a lot of economic data. In fact, over the next 4 weeks, we'll be seeing a lot of the data that we had been missing over the last month or two coming through. So there is a chance that some of the economic concerns start to creep in, and as a result, you could see some of the steepening of the yield curve reversing. You could see some of the small cap financials sort of value rally lose a little bit of shine. But certainly, looking through to 2026 overall, as I said before, we do have a constructive outlook. So we do think that a lot of these companies that maybe haven't done so well this year could start to see those gains spreading, this broadening out of the rally as we proceed into 2026.
Now, would you be interested in the bonds of any of those companies at all? Or what is your take on what we saw, with Oracle bonds, for example, literally almost being priced as if Oracle was about to default on them?
Yeah, we don't necessarily think this is evidence of an AI bubble, but it is, I think, reflective of the fact that investors are wanting to see, why are you investing in AI capex? When are you expecting to see those productivity gains coming through? So again, this is a question of selectivity and investors wanting to see delivery of some of the hopes that are coming through. Generally speaking, for credit markets, we are quite positive. We have exposure to investment grade. We have exposure to high yield at this time because of that constructive outlook. Emerging market as well. So I think there's a lot of opportunities around there. It just goes down to looking at the company specifics, their balance sheets, and what they're expecting to do with AI, and of course, coinciding that with valuation concerns.
All right, Seema, thank you so much for joining us this morning. That is Seema Shah of Principal Asset Management. Now to other top stories trending on the terminal this morning. UBS shares soaring, hitting a 17-year high after a group of influential Swiss lawmakers proposed watering down the capital requirements for the bank. The proposal would allow UBS to use junior debt, known as AT1 bonds, instead of equity to meet capital requirements. China is considering incentives worth as much as $70 billion to support its chip-making industry. Sources say details of those incentives, exact amounts, and target companies are still getting worked out. The plan underscores Beijing's resolve to reduce its reliance on foreign chip makers. And the UK economy contracted again in October, underscoring fears that momentum was curbed in the run-up to the budget. GDP fell 0.1% in October, following a contraction of the same size in September. Economists had been expecting 0.2% growth. The decline was driven by falls in services and in construction. Coming up, Lululemon forecasts higher profit on strong demand, while the board hunts for its next CEO. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump says the U.S. is willing to help Ukraine with security guarantees to end the war with Russia, but expressed frustration at both sides over the pace of peace talks. Bloomberg Government's Jonathan Tamari joins me now. Jonathan, he's expressing frustration, but it's more with Ukraine for not just giving up Donbass, right?
Yeah, and this has been his posture throughout most of these talks, is that mostly he thinks Ukraine should just give in, that they're in the weaker position, the weaker country, and that they should give up territory to Russia to end this war. And obviously that's a very difficult thing for Ukraine, and it's been a huge sticking point throughout and remains one.
So what happens next then? I mean, will Ukraine have this actual referendum, and is there the possibility that, land might actually get put into a demilitarized zone or handed over even?
I mean, that is one recent development that is significant, is that Zelensky is suggesting that there's at least a possibility of this happening, whereas earlier this was something he was so firmly opposed to. So it does appear at least possible. Whether it actually happens, I think we're waiting to see. As you know, there's been so many swings in these negotiations, and I think a lot also depends on what continues to happen on the battlefield, where Russia has been making gains. And that has certainly strengthened Vladimir Putin's position and put Ukraine in a tougher spot.
Well, speaking of swings, if we move to India, Trump and India's Prime Minister had an actual conversation. Does this mean we might be beginning to get close to resetting ties after that 50% levy in August?
It kind of depends on who you listen to a little bit. This is the fourth call between them that we know about. Indian officials are saying they're hopeful something can get done in maybe the first quarter of next year. Trump is maybe being a little bit more skeptical, a little bit less optimistic. So they're not quite that close to a deal yet. It doesn't seem like, even on the most optimistic timeline, even though the two leaders are trying to keep momentum going.
All right, let's move to domestic politics now. And obviously the Affordable Care Act subsidies, they're set to expire, and senators fully expect that talks will continue past the credits end. In fact, we actually have the House rebels telling voters, you know, we tried. They've sent the healthcare bill without the ACA fix, according to Axios, just in the last few hours. That's the House GOP. What happens next in this morass, Jonathan?
It is certainly a morass. So next week, the House says they're going to put up, House Republicans say they're going to put up a number of healthcare bills that do not deal with the Affordable Care Act. They hate that law for the most part, aside from a small handful of them. Those bills are not they may pass the House, but they're not going anywhere in the Senate. There are a number of senators and House members who want to extend these, but it's going to get more difficult once we get to the end of the year. People are going to start paying these higher premiums, and the politics get tougher. Democrats might be very reluctant to sign on to anything that bails Republicans out of what Democrats see as a Republican-created problem. So, and as you know, we get into an election year next year, so that adds to it more tension. So the talks will continue, but I think throughout I've been pessimistic that they'll reach a deal. I still think it's a long shot that they will.
All right, Jonathan, thank you so much. Jonathan Tamari there of Bloomberg Government. Broadcom shares sliding in the pre-market as investors scrutinize the chipmaker's $73 billion backlog of AI product orders. That figure fell short of more bullish expectations.
It's hard for me to pinpoint what 26 is going to look like precisely. So I'd rather not give you guys any guidance, and that's why we don't give you guidance, but we do give it for Q1.
Hock Tan there, Broadcom CEO, on the conference call. Bloomberg Intelligence analyst Matt Bloxham joins us now with more. So, I mean, it's had a fantastic year, a fantastic few weeks, really, Matt. Mm-hmm. Is this just investors saying, okay, you know, keep doing what you're doing, but we're just going to take a little money off the table?
Yeah, I think that's a fair assessment. And, the context is that this company's had a kind of great run in its share price. And, I think some disappointment there. One of the analysts was trying to put them on the spot and say, we think revenues for AI is going to be about 50 billion next year. Does that sound about right based on that 73 billion order backlog? And that's what he didn't really want to be drawn on. I think on balance, they're expecting the momentum to be better than that. But, this is a market that's moving incredibly quickly with lots of moving parts. So I think, rightly so, they're being kind of cautious and not wanting to kind of hold themselves to kind of any particular number. I think there was an issue there, though, also about kind of gross margin squeeze. They're talking about in Q1 about 100 basis point squeeze on gross margins, and that's because the AI products have higher costs in them, and that was a bit of a disappointment for investors. The company's saying they can offset that with their operating costs, but certainly in the tech space, investors never react well to a kind of gross margin squeeze.
Matt, that's it now. That's the quarter done, really, for all of the AI companies. I mean, will investors take down their expectations now for next quarter, or does this cycle continue where investors are expecting more and more and more margins to be greater, orders to be greater, ease of financing to be greater?
Yeah. I think as we get back to work in January, investors are going to be looking for more data points about how enterprises are deploying AI into their businesses, what the return on investment is, to kind of see that momentum of what I'd call real demand coming through, not, big hyperscalers spending money with NVIDIA and spending money between themselves, but actually money coming into that system from corporates saying, actually we see a really strong role for AI on our businesses and we're going to increase our budgets to deliver that. And that starts to give you more certainty about the 2027-28 outlook, and that things like the OpenAI $1 trillion plus investment starts to make sense. I think that's what investors are going to be looking for next year.
All right, Matt, thank you so much. That is Bloomberg Intelligence's Matt Bloxham. Lululemon shares climbing after boosting its full-year EPS guidance on strong holiday demand. It also said Calvin McDonald will step down in January with no successor yet. Bloomberg Opinion retail columnist Andrea Felsted joins us now. Andrea, how unusual is this that a CEO steps down but there is no replacement nor a plan for a replacement? I mean, I'm not sure there's even an interview process ongoing, is there?
No, it's just they're starting looking now. I mean, it's clear Lululemon really needed a change. You know, it hasn't been working. Did really well out of the athleisure boom during the pandemic and post-pandemic. Since that has happened, fashion trends have worked against it. We've gone from leggings to wider legs. Denim's having a moment. We're all back in the office now. We're smartening up, not sort of, around the house in track pants. That's all sort of worked against Lululemon, and they probably haven't reacted as quickly and effectively as they could have done.
And I presume there's somebody out there that can help them turn the tide, is there?
I think it's a very difficult task. I think it's a long list. I think the main thing is really to work on the product. I mean, we saw with Adidas, they had a very tough time after the Yeezy debacle, but their CEO, Bjorn Golden, he's amazing with product. He's got a real flair for product, and that's really helped them turn their fortunes around. So Lululemon really needs someone that can get to grips with that core range, make it trendier, make it able to withstand the pressure from rivals. And also, I've long thought that there's a whole category waiting for Lululemon to attack, and that's we're back in the office, but we haven't given up the need for comfort. And Lululemon's got great skills in fit, in fabric, so why not create office clothes that are comfortable? And it's had a stab at doing this, but it's been a bit not very impressive. So it really could, really need someone to get to grips with this range and, entice its customers back and give them a reason to shop.
Andrea, I think you should be on that list of names for potential CEO successor, because that sounds like a good plan to me. That is Bloomberg Opinion columnist Andrea Felsted. And do check out her latest column about the Ralph Lauren Christmas as well and why it's marketing gold. It's a fantastic column. Coming up, we're going to get you set up for your trading day, a big day of Fed speak. This is Bloomberg. Now we'll look at what's ahead today. It is a day of Fed speak. We have Philly Fed President Anna Paulson, Cleveland's Beth Hammock, and Chicago's Austin Goolsbee. They'll all be speaking between now and 10 a.m. We get Rent the Runway earnings. That's before the bell. And we're set to get the Nasdaq 100 annual reconstitution announcement, so that might cause some waves. Let's take a look at some pre-market movers. Broadcom continuing its slide that started after hours yesterday after its sales outlook for the AI market failed to meet investor expectations. Lululemon up almost 10% after its profit forecast, but also the CEO stepping down. A new one is going to have to come in. And Tilray, among cannabis stocks, surging. It has a new product line out, but it also coincided with President Trump expected to direct agencies to reclassify marijuana as a less dangerous drug. Let's take a look at your macro picture. Day 2 post FOMC and before next week's data. That's it for Bloomberg Brief.